Welcome back to the Get House podcast, brought to you by GetHouseSurvey.ie. I'm your host Noel, and in this episode we're going to talk about getting mortgage ready. Our guest is the wonderful Naomi Battle, who is a mortgage master with EBS. We cover everything from when to start speaking with your lender, what to do if you have a not so perfect credit record, and right up to how the central bank lending increase to 4 times your salary might impact you. If you're thinking about starting your house buying journey, or even if you're already in the process but want to get a better insight into how banks and lenders operate and what to expect, then this is the episode for you. So sit back, relax, and let's get into it. So Naomi, welcome to the podcast.
Thank you so much.
So I'll get you to start the way I get all our guests to start, and that's by telling us a little bit about yourself and what you do at EBS.
Lovely. Great. Okay. Hi, everyone. It's great to be here. My name is Naomi Battle. I am a mortgage master with EBS and with them a long number of years. And prior to that, I was also in a similar role with another lender for probably about 10, 15 years. So plenty of experience in what I do. But I suppose we look after customers who are looking to get on the property ladder, secondhand homes or holiday homes. So we'll meet a customer and take them through the process from start to finish.
Okay, and so let's kind of start there. So what I do in all the podcasts, I try to put myself in the shoes of the buyer, and I try to ask questions that way. So I'll pretend I'm a buyer, and I'll kind of kick off from there. So I think for anybody, especially if they're a first-time buyer, the thoughts of reaching out to a bank or any kind of lender can be really daunting. It can be a scary experience, because I was there myself about 5 years ago now. I think we kicked off the process. So I was there myself. I know the feeling, and from the online groups, you kind of see the apprehension in people. So we'll start kind of very straightforward. If I'm on the house buying journey, maybe I'm with myself, or maybe it's with my wife, when should we reach out to the likes of EBS to start the conversation there? Is it when I start the process at the very beginning, or should I wait till I'm closer to I'm nearly ready to apply?
Yeah. So really, really good question. And I suppose the thing is that I'd always say, come and chat to us as early as possible. Whether you feel you're ready, or whether it's a planning meeting, whether it's 6 or 12 months time. But I'd always say, even like if the idea pops into your head about wanting or wishing to get on the property ladder and buy your first home, come and talk to us even 12 months before. I love that planning meeting actually, because it's great when you have customers in front of you, and I suppose for a customer, and I'd always put myself in a customer's shoes as well, is, I suppose you're very vulnerable, and you're opening yourself wide up in terms of your personal financial situation. And that can be difficult. And it's probably not knowing what to do, I think. And those planning meetings are key. And it's great actually, because I love taking a customer through that, because you might say, okay, we're this is for maybe 6 or 9 months time. And we put a plan in place in terms of what a customer needs to do. So that might be maybe having a look at their finances. I suppose the first thing is really around their income piece. Once you're satisfied around that, it's really, you're kind of getting down a little bit deeper into customers' personal. It could be like their current account, their operation, if they're renting, how they pay their rent. So I'd say, like, we would talk a customer through account management, like that would be key. Because I suppose when an underwriter is looking at a mortgage and they're assessing it, and sometimes, you would feel sorry for a customer, and it depends on their circumstances, because it's based at a moment in time. But an underwriter, while they look back over a 6-month period in terms of their finance, so we're talking about current accounts, it's always kind of like, there's always that piece around their credit history. So obviously you're looking at CCR in terms of like the last 5 years in terms of credit history. So we'll have a talk around that as well. But when you meet a customer and you say, okay, this is what we need to do, and then that plan is put in place, and then they come back in 6 months' time, and the mortgage flies through. It's just, I've had loads of those, and it's lovely. It's a lovely, like, there's an end piece for a customer, I suppose. So I'd always say, we'll sit down, talk about even where they want to buy, how much they want to borrow, what do they have in funding, where is that coming from? So I think that planning meeting is really key. So I would definitely say, 6 to 12 months. It's never too early, really. It's never too,
Okay, yeah. Now thinking back to when me and my wife applied, I think we started speaking to our advisor about, I think it was about 6 to 9 months before we eventually applied. And much like you said, he very much got us in the mindset of, okay, this is where you are now. In 6 months' time, you need to be here. And he kind of told us what we needed to do and what to look out for and how to prepare. And then when the time for application did come around, it went a lot smoother than I thought. Now there's still a few hiccups, but it went a lot smoother than I thought it would. So I can see why reaching out earlier is definitely a benefit.
Yeah. At least you know what's ahead of you then and what you can expect. And I suppose that, when you do put that plan in place and come back then in 6 months' time, I think it's not as daunting then. The whole experience is daunting. And then, if everything is done the way I suppose that we would have envisaged from the initial planning meeting, there should be absolutely no issues why the mortgage wouldn't be approved straight away. Okay.
And I suppose going back to it can be daunting reaching out to a bank or a lender. It puts a face to that as well. So it'll kind of break down those barriers. Yeah,
it's lovely. And I suppose with EBS as well, I suppose there is that extra personal touch in terms of contact. So I'd always say, keep in contact with me, even from that initial meeting until the customer feels that they're ready in 6 months' time. And ask loads of questions, because I've had customers asking me, I need to upgrade the car. Is that going to have an impact? I had a customer actually last week, just so wholesome. Can we go on holidays? Do you know what kind of holidays? Those kind of things, those little questions, but they're hugely important because buying a car, upgrading a car, or I want to go on holidays, or like that, it could be a family wedding, everything like that. It does add extra costs on top of trying to save for a mortgage. And if you're drawn from savings that you have set aside for a deposit, the customer needs to know how that could possibly impact their ability in terms of showing repayment capacity, which is one thing that we can talk about as well.
Yeah. And that is, so I'm a member of a lot of different online groups for first-time buyers, and that is a question that pops up regularly. People will say, oh, I'm due to I have approval in principle, but I'm going to apply for drawdown in the next few weeks, but my car is broken down. Can I take money out of savings? And I think one of the things my mortgage advisor said to me at the start was, you still have to live. Like you can't stop living. You can't stop your life moving. You still have to live, but you're obviously trying to do a bit more consciously. So when things like that pop up, as you said, it's good. It's good to still speak and speak to the advisor and let them know what's happening. But
and even I'd see some customers, and they'd have what we would probably call a fun fund, so. Money, but again, it's money that might be set aside for that again, maybe for car tax, or I need to put new tires on the car, or that I want to go away for a weekend, or I have a hen party coming up and it involves travel, that sort of thing. So once it's not impacting, but that it's how it impacts. But also I've been asked numerous times where a customer has been offered a new role, so a change of employment, that's massive, that. And again, it's always about kind of keeping in touch and coming back to your mortgage master and saying, what impact would this have on, and what advice would you give, so that those kind of things are key, so I'd say definitely open communication, and that always come back and ask questions, because I like that, especially for first time buyers. It can be pretty daunting experience.
Absolutely. Okay, now I know every bank and lender is different, but when, in the case of EBS, when somebody has decided, okay, I need to reach out and get the ball rolling in this, and they reach out to you guys, what can they expect? So from the moment they either email or fill out a form or call you, what can they expect in the next few days, or at the start of the process?
So EBS, we have obviously we have we would usually love to sit down and have a chat with a customer, is the way we would see it. So that, it's a chat. It could be a chat in your nearest office, or it could be a chat in a location that suits you, and maybe sit down and have a cup of tea. And I'd always say maybe just sit back and let the customer tell you where they're at. I'll always get a feel for if they're ready now, or like that again, if it's a 6-month time.
Okay.
We also have an online portal as well, which works and has worked well for a lot of people who are busy and they really just time. So we would offer both, I suppose, a meeting, or would a customer prefer to do the application online? But you'd always have a conversation first and arrange a call to talk the customer through the process. So I'd always say, like, with EBS, like I felt, I suppose, when I joined EBS, and it's a good few years ago now, I just loved the personal touch that they have. So, and I suppose like that, you deal with one person from start to finish. And I think that's key, because you get a direct line as well. So you get my mobile number, or your mortgage master's mobile number, and you contact them anytime on that. As I always say, when I meet a customer first, I'm not a 9-to-5 person. And I suppose we're in these roles because we absolutely love what we do. And I always say it every day, I'm so lucky. I love what I do. And I really do mean that. And for me, it's about looking after the customer. That, that's key for me. I mean, and whether they're ready now or in 6 or 12 months' time. And it's all about, I suppose, instilling confidence in what we're experts in. And I suppose it is taking the customer through the mortgage process from that initial meeting right through to collating documents, assessing the application at our level, and then positioning it with a credit underwriting team, and keeping that application open. Like, even when that application is submitted to credit, that the customer understands the timelines around that as well. So, when will I know? When will I hear back? Is it, because they could be waiting to put a bid on a property? Like, so would that be like, I'm talking about weeks, months? Like, what is it? And generally, like, we would always say, like, 5 to 10 working days, we have a decision back. And when we come back with a decision, then the mortgage, it's approved in principle, but it's fully underwritten. But it means that, that you can happily, head off and bid on that property and find your dream home. And then we take the customer then right through until the end process. So the next step then is for loan offer, and we'll talk to the customer and explain what is required from the customer side, until the customers are signing contracts and loan offer with their solicitor, and take them right through to drawdown stage. But I'd always say, like, when I ring a customer, with good news, such good news as your mortgage has been approved, it's okay, this is what we need to do next. So I'll always say, even if a customer has got mortgage approved and they haven't found a property and they're still on the hunt for finding their dream home, it's the most important thing is not to stop what we're doing in terms of savings. So because if there's a big change in a customer's financial circumstances, in terms of getting the mortgage approved and then going to loan offer, I mean, generally we wouldn't be looking for up-to-date documents again. But if it goes past, maybe a 3 or 4 month period, like, we might look for a payslip or a 1 month bank statement. Just to make sure that the changes. Like,
that's a really important point, because I think if you map out the perfect house buying journey, and I don't think anybody has the perfect 100% perfect, but if you map out the perfect house buying journey and you map out how everything should go in sequence, it's not always like that. Sometimes you'll get mortgage approval and then the house you're thinking about falls through and you're another few months going, or sometimes the dream house will just appear out of the blue and you have to move quicker then to try to get the mortgage over the line. So it's a good point. It's nobody has the perfect experience, so it's important to kind of be open to being flexible when you apply or when you apply for drawdown. Sorry. Okay. And I'm going to jump ahead in my questions a small bit, because you touched on something there when you initially go through and you get approval in principle, and then you're ready to draw down, and the mortgage application goes on to the underwriters. So the underwriters kind of have this mysterious hue about them online. And because they don't generally speak directly to to customers, and it can be a bit mysterious. But tell us a little bit about what happens when it goes to the underwriters. What do they do? What are they looking out for? And how is that different from when a customer is speaking to their initial advisor?
Yeah, I know. Yeah, love that question. Um, uh, and I know I mentioned this to you as well, is that I actually underwrote myself for a good few years. And it's actually lovely to sit both sides, and as I said earlier, like, I'm all about the customer, but it's great to have an understanding from a credit perspective in terms of what does an underwriter look for, like, what are they looking for? And I suppose an underwriter is there to assess risk, really, and at what level of risk are they willing to take on to lend money to the customer. But generally, I suppose when an underwriter gets a case, they'll start off by having a read through the mortgage application. They'll also, and I know we can talk about this as well, is have a look at the central credit register. So in terms of your credit history, that's massive,
Mm-hmm.
I suppose, and if there's any findings on that, but we can touch on that as well. I suppose during the process, they'll also be having a look out for any red flags, any inconsistencies. I suppose overall, an underwriter will evaluate the credit history, assets, the size of the loan that you're requesting, and I suppose how will they have they anticipated in terms of how you'll pay that back. So that's really, I suppose, down to repayment capacity. So the first thing, I suppose, to be is, does it meet the lender's credit policy? And then also, key piece is, has the customer shown the ability to repay back the loan? And again, we're looking at the last 6 months, and that's where we go back, emphasis on having that planning meeting if that's required.
Yeah.
I know that there's always a perception of, I suppose, and it's not, because we're all one team. We work together, like, but I suppose, the role of the mortgage master is, like, we'd assess an application at a branch level. So I suppose that, when we're going up to credit with an application, that we can obviously stand over it. And, for the customer as well, is that, that they have a clear understanding of, I suppose, pieces that an underwriter will be looking at, that we've actually addressed that with the customer. And again, back to, is the customer ready now to apply? And if not, what plan can we put in place? Because really, the job of the underwriter is to assess the overall risk in terms of lending money to the borrowers.
Yeah, and essentially I'm going to try to summarize it as I understand it. They're making the final decision on whether the lender makes this investment in the customer, and so the future success of the bank's business essentially rests on every single decision like that. So
when the application is submitted, and an underwriter has done a full assessment on the case, that they'll come back and they'll either approve it, perhaps they'll ask some questions, or else they may defer it, if for something that had come up that perhaps that we didn't know about, or that they're not willing to take the risk on it.
Okay, Naomi, so you kind of touched on it a bit there, talking about the underwriters, but when people are trying to think of their credit history, and I'm a really good example for this. So in my early 20s, in the latter years of the Celtic Tiger, I went a little bit crazy with spending. Trips away, all on the credit card, the whole lot, and I wasn't exactly I didn't exactly repay them in the best way. So about the time I went for my mortgage, it was thankfully about 10 to 12 years later, and I had got everything kind of cleared a good few years before that. But that terrified me when I was applying for a mortgage. So if somebody does apply for a mortgage and they might have one or two, say, small blips on their credit history, how does that compare to somebody who has just completely ignored a credit card, for example, and decided not to pay it? Are they treated differently, or is it just, if there's any red flags, it's a straight no?
Great question, Noel. It's so important, and I come across this regularly, and it can vary so much from like that, the student credit card that was forgotten about, or perhaps somebody had a credit card, and I've seen where they've emigrated for a few years and then they've come back and then realized, oh my God, there's a credit card there. And I always say everybody's situation is different. And it's how you deal with that. And that's what really the bank are going to look at. And I suppose just in terms of a credit check, a customer will want to know, I suppose, what does that look like, and what does that what shows up on it? So things like any loans, credit cards, overdraft if you have an existing mortgage, hire purchase agreements, and that look back goes back like to 5 years. So and that tells a lot about a customer as well in terms of their track record on repaying loans down. And an underwriter will look at that. Mm-hmm. Absolutely. A huge evaluation on that. And actually, when I was underwriting, it was the first thing you looked at, so, but I suppose, what a customer wants to know is how does that adversely affect my application? And what a lender will look at is, how did the customer, the borrower, engage with the lender? So when they discovered it, did they engage immediately? Did they clear down the debt? Did they put an arrangement in place? Do we need to still factor that in as an outgoing? But generally, if there is, and sometimes actually a customer doesn't even realise. I've had an application where there was that, student credit coming out, and the customer had absolutely no idea about it. But I think once we address it and are upfront about it, and that the customer has engaged with the lender, and the debt has either been cleared off, reduced, or there's an arrangement in place. And I suppose it does, and even that you speak of that of late, and I suppose even with COVID, it's not that long ago, but I mean, I met a customer last week actually, and a lot of people suffered financially with reduced income and maybe having to go into an arrangement on a loan, if there was missed payments, but it's all about, I'd say, for the customer, engage with the lender. Absolutely. Okay. It's so important. Acknowledge it. If there is that student loan or credit card hanging out there, get rid of it. Get rid of it. And even if you were concerned yourself, you could run your own credit check before you go and meet your mortgage master. Okay. Or definitely plan a meeting that'll be spoken about as well. We'd have to cover that off in terms of what the customer would need to do.
And then if anything does show up, or if you know there's something there, or you run your own check and something shows up, it's really how proactive they are in dealing with it and how they address that idea.
Yeah, it's how they've engaged and how they've dealt with it. Do you know? I mean, if it was a case whereby, like that, just an example of that, where a customer went away and they actually just did not realise it and came back, and it might be a small balance outstanding, but it's there. Yeah. There's actually different codes on the credit check, for if there was a credit card or a loan that was in arrears, how long it was in arrears for, was the debt closed off, was it written off? But I'd say to customer, if they were concerned and they felt that there was anything there, run your credit check yourself and come in and talk to your mortgage master about it. Yeah. But I would absolutely say you need to engage with the lender. And like you said, it's how proactive they were in dealing with that, but I've got cases approved where there has been a history of poor credit rating, but the customer addressed with it. They were that again, it was either loans missed, payments on it, or credit card, but it's how a customer dealt with it and how they engaged with the lender.
Yeah, okay.
That's what.
I think that's fair enough advice there for people. And then another one, and I particularly like this question because I spent the first 9 years of my career, during Celtic Tiger years included, working for Paddy Power. So people ask me this question, and I have to say I don't know. I kind of stay as conservative as possible with the answer and say just don't do it. It's a topic of gambling, and we're doing this interview on day 3 of Cheltenham, I think, so it's quite topical.
Yeah.
But the issue of gambling, some people say even if you have one transaction to a gambling company on your statements, the bank will just say no. Others say, look, if you're doing it within your means, it's fine. Others say, the odd one is okay, and there's all kind of different advice out there. What I tell my friends is, look, just don't do it for 6 months. You'll live without it. That's fine. But how do banks and lenders actually think about that? If it's the week of Cheltenham and you see €20 deposit going to Paddy Power or any other, I shouldn't be promoting Paddy Power or anybody, but a €20 deposit going to a gambling company. How do the banks look at that? Like what did it? Does that really show a red flag, or how do they approach that situation?
Yeah, and it's like what you've said there. It's Cheltenham. If there was one or ad hoc, that's fine. And I suppose with gambling, it's such a grey area, for lenders to discuss, because I suppose for a customer, they'd have to sit back and have a look at their account and the activity, if there is gambling there. Generally, an underwriter will not like it. But it does depend on if it's affecting or impacting your account, first of all. So your account maintenance is huge. And again, I've seen this, so with gambling, if it's regular and it's having a negative impact on your current account operation, that is a problem. If it's affecting your ability to save, that is another problem, and gambling within your means, again, I suppose, it's such a grey area, but if there's ad hoc or small amounts, like that's fine. I wouldn't be hugely concerned about that. But if it was ongoing and negatively impacting, whereby your account was going into overdraft, if there's an overdraft facility there and it's having an impact massively on that, and again, it's impacting your ability to save for your deposit, I'd say no. Yeah. Okay. It is a problem.
Yeah. Okay. Yeah. And I get what you mean. Every case is different, and it's not a 100% yes or no answer. It's like a lot of things, I suppose, with finance.
Yeah.
Oh, okay. And then one of the last few topics I wanted to touch on was a lot of people, especially if they're already on the mortgage journey or the home buying journey, they'll be aware that at the start of the year, the central bank lending rules change, or the cap on lending rules change from 3.5 times your salary or your combined salary to 4 times your combined salary. Yeah. So what does that actually mean for somebody when they're applying for a mortgage? And is everybody guaranteed 4 times their salary, or is that on a case by case basis? So how does that change things this year?
Yeah. I know it was great news announced for the 1st of January this year. And just what you mentioned there, I'm just going to pick up on that. It is case by case, and it's fantastic, for customers. I suppose the way the market is in terms of rising house prices, rising interest rates, and for first-time buyers, it's so hard to try and get on the property ladder. And that 4 times does allow the customer that leeway to borrow that little bit extra. And I suppose there are variables involved when it comes to assessing and how much we can borrow, how much we can lend to a customer, how much a customer can borrow. I suppose with rising interest rates and inflation, a lender will want to make sure that you have enough net disposable income after their calculation. So a lender will look, maximum 4 times is generally what a first-time buyer would be looking for. 4 times your combined income or your standalone income. And by net disposable income, I mean, what is the customer left to live off, minus dependents, if that's applicable, monthly loan commitments, proposed mortgage repayments. So what have I left to live off after everything is paid? And also that you can afford, and that you've shown that you can afford that higher level of mortgage. And that's where the look back goes in terms of the 6-month piece. And I suppose that stress test payment of 3.5 times versus 4 times, and with rising interest rates, it can be significant enough in terms of showing repayment capacity. So that's why, again, we go back to always, for that planning meeting and how much do I need to put away. I think if the above points in terms of the net disposable income and the repayment capacity aren't there, we might need to look at maybe putting a plan in place. So you're not always guaranteed to get that 4 times.
Yeah.
Now, if everything stacks up in terms of, and I suppose, with first-time buyers, you have a couple of different scenarios. They're renting or they're living at home to try and save for that deposit. I'd see a lot of that, especially with COVID and remote access as well. There's still a lot of people working remotely.
Yeah.
And they have the ability then to save if they have. But I think with rent repayments and then with savings as well, they're the kind of the key pieces that we will be looking at. But with a rising interest rate environment, I'd say you definitely need to reach out to your mortgage master and have a chat around that and have that conversation. But if everything is in order, there's no problem, with 4 times the salary. But it's not a given, unfortunately. It's not a given. And those 2 things have to be really in place.
Yeah. So again, it's like get in, talk to you guys, and then you can at least give I suppose, an early estimate of whether or not they're likely to get it or what they need to do to get there.
Absolutely. Yeah, absolutely. Yeah.
Okay. Okay, Naomi, and I want to jump back to something you said at the very start when you were describing what you do and how you interact with customers, because it brought back kind of a good memory for me. So I don't do my banking with or any of my financial loans or anything with EBS. So this is going back to I think 2003. So going back 20 years ago now. My granny had just sold her house, and she had all the money in the bank, and she was paying to get a granny flat built out our back because she was moving in with us. And I don't know what kind of deal she was done with the builder, but she was paying them in cash. Anyway, one day she says to me, "Can you pop up to the bank with me? I just need to get out some money." I was like, "Yeah, no problem." So went up to EBS in Tala in the square, and went up to the counter, thinking she was just going up to the counter and speaking to the cashier as normal. The cashier says, "Oh yeah, I think might have been John or something like that. I might maybe misremembering. Oh yeah, John's waiting for you, Mrs. Tay. Come on through." Went into the back room, and her I think it was a bank manager or the branch manager at the time was sitting there talking to her, and he's like, "Oh, Sadie, come on in." Her name was Sarah. Everybody called her Sadie. "Come on in." And he had to sit down with her. I sat down beside her, thinking, what the hell is going on here? And he has this most wonderful conversation with her, and he remembered things she had talked about with him before, and he knew exactly what she was going through. She had just sold the house. It was a big deal for her, moved in with us. Then she wanted to keep some money aside for her kids and so on. And he was chatting to her about all that. And then he said at the end, "Oh, you want to take some money out today?" And he starts stacking cash up on the counter for her. He disappeared for a minute. She didn't tell me she was going to take out 20,000 in cash and give it to the builder. So she's using me as a bodyguard. So anyway, I just remember being a wonderful conversation. It was so personable. And when you spoke earlier on about the mortgage masters, there kind of brought back memories like that. That it's even the title of the role, it's different to other banks or other lenders, and you want to try to get to know the customers. But how that ended, she said, "Okay, come on, we have to get back to the house now." And I'm like, "We're not just walking through Tala with 20,000." I was like, "Come on, we'll jump in a taxi." And she's like, "Oh no, we'll ramble down through the village." I'm like, "No, we're good." So anyway, we ended up walking halfway home with 20,000 in her purse. Me, the nervous wreck, just sweating the entire time. Yeah. But anyway, just kind of brought back those good memories. So in EBS, like, why is the role called mortgage master, and how do you try to approach it differently to other lenders?
Yeah, I suppose even the word in the title, I suppose mortgage master, I suppose we're experts in what we do, and even it goes back to what I said there at the beginning is, we're all in these roles because we absolutely love what we do, and we're all about the customer and looking after the customer. It's a very personal approach, and I love the face-to-face meetings. I love getting to meet people, and it can vary. That can vary from the coffee shop, having a cup of coffee and a chat, because that's the way I like to do it. I mean, I don't want the customer coming in, because it is a very daunting experience, especially if you are a first-time buyer. And I suppose it's putting the and creating the atmosphere for I think the customer, that it's a chat, and I'm here to help you, and I'm here to do my best for you, and I want you to get a mortgage approved so you can buy your dream home. And that telephone call, when a customer has got the mortgage approved, like, it's absolutely fantastic. Like, and it never changes. And I'm at this a long time. It's such a fabulous experience. I always say to a customer, and it's the biggest outgoing, that you're going to have for the next 25, 30 years. But I'm here to help you. I want to look after customers. The end goal here is that I get the mortgage approved for their customer. They find their dream home and pick up their keys. And that process, I want to be as stressful and as streamlined as possible for the customer. If there's any stress, put that on me, put that on your mortgage banker. Like, that's what we're here for, there's no question that's, that might seem stupid. Like, I'd have maybe a customer ringing me going, I'm really sorry now, I might have asked this before, or, it might be a stupid question, but there's no stupid question, I suppose it'd be nearly like me bringing down the car to the mechanic. I wouldn't have a clue looking at the bonnet of the car, like, so, and that those lines of communication being open. And like, the first thing I always do after, like, I have a meeting or have a conversation with a customer, we sit down and have a chat, is, there's my mobile number, like, put that in your phone. I ring them there, then, so they save it down as Naomi. And but I'd always say, like, even after that first meeting, like, there's going to be questions, so I always say, write them down, jot them down, and send them across them on an email to me or WhatsApp me, or, there's no problem. Like, as I said to you earlier there, I think what makes us a little bit different is that personal approach, and definitely, like, the mobile number. Like, I've had a customer actually only the other day saying to me, like, you can't put a price or a value on having a direct line. There's no, you're not through to a call center, dial 1, dial 5. Like, it's, it's my mobile, and that's it. And we look after the customers from start to finish, and I think that's what makes us a little bit different as well. We're all so customer focused.
And I think both our day jobs, we deal with customers in the house buying journey, and I think having that kind of ability to contact somebody quickly and not be waiting days for a response, and so it makes such a big difference, because there's so many moving parts in the house buying journey that if one thing slows it down, even just talking to somebody, if that takes you a few days, that knocks everything else back a few days. And if there's 2 or 3 of them, all of a sudden you're back a week. And so I think from the buyer's perspective, because I have to give dues where they're due. But I think I do see a lot of positive feedback about EBS and how quick they are to respond once you're in the process, and you have your mortgage master lined up. So I can definitely see that as well.
I mean, it's so important, like, for a customer on their mortgage journey, even when the application is submitted, like, if the customer's waiting a few days, and they might be getting a little bit anxious, like, but, I'd always say, like, reach out to your mortgage master. But we will always contact the customer. I always say to the customer, if you ring me and you don't get me, I'm generally at a meeting, or I cannot pick up the phone. Like, the phone, it's there for a reason. But, like, and even, like, personally, like, I have a service level agreement with myself. I'll always call the customer back that same day. And for me, if it's 6 o'clock in the evening or 7 o'clock, and I can just text to say, are you free? Or, like, schedule calls in the evening for customers. Like, we'll always work around the customers, like, their work life as well. So if it's 7 or 8 o'clock in the evening, like, I've done telecalls with customers for mortgage meetings, like, there's absolutely no problem at all. Or Saturday morning, cup of coffee in the local hotel, like, let's sit down and have a chat. You want to feel as comfortable as possible. And it's about building a relationship there, and that it's a huge, like, they need to have trust in you, to believe you're going to look after them. And that's what we're here for. Okay.
And before we wrap up, there's an event happening next week, and I'm going to let you explain it, because you've done a few of them before. So I'll let you talk about the event next week, and how people can sign up for it.
I know, it's very exciting. It's very exciting. Really looking forward to this. So we are doing a free virtual event called Home Truths. whereby we will have an expert panel of professionals in our industry to help first-time buyers, second-time buyers, holiday homes, self-builds. So we'll talk you through the process from start to finish and what that looks like. And open questions, we have Aoife Walsh, property solicitor, Shay Lally, home to restore, and then obviously your good self and myself as well. And Eric Lawler is the host, who's absolutely fantastic. But it's lovely. It's like that. It's a chat, and it's talking. And again, it's going back to just the customers asking questions, like ask as many questions as you want. That's what we're here for. But what I'll be doing is I'll be taking the customer and talking through the process from that initial first meeting right through to the approval and right through to drawdown. So I'll talk through all the different stages and steps in that process.
Okay. And I will I'll put the link to this in the show notes as well for anybody who's listening. But how do people sign up for the event?
Yes, so if you go onto the EBS website, you can log on there, or joe.ie, or Instagram onto EBS, and the link is just in the bio there. So just click onto that and register.
Perfect. And as I said, I'll put that link in the show notes for anybody who's listening, wants to log on and listen along to the conversation. And just on a side note as well, a couple of years ago I had Shay on this podcast. Absolutely wonderful guy. So I'm looking forward to catching up with him again. Should be good.
I know. I'm looking forward to meeting him. I haven't met him actually. Really looking forward to it. Yeah, it's a great event. Yeah, it's lovely evening actually. It's lovely.
Yeah, really, really good guy. I'm always jealous of his Instagram account. He takes pictures of a house that it's called Houses to Restore, and he talks about what he'd do to if he was going to restore it, and some of them are absolutely fascinating. I'm a big Grand Designs fan as well, so I do picture what he's talking about.
Me too. I love it. Absolutely love it. The before and the after. Love it.
Okay, Naomi, now I know I partly delayed us as well. We had some technical problems and we've gone way over time, and I feel guilty because I'm nervous in case one of your customers is trying to contact you and I'm keeping you here talking. So we'll wrap up there. And thank you very much for jumping on and having a chat with me. I really enjoyed it. So I'll put all the links and everything that we've talked about in the show notes. And if anybody wants to contact us, just reach out.
Lovely. Thank you so much. Thank you so much, Noel.
And that was the end of the episode. Can you imagine a world where every person you encounter on the house buying journey is as friendly, helpful, and as passionate about what they do as Naomi was? It was an absolute pleasure to talk to her. So thank you very much, Naomi, for giving up so much of your time to talk to me today. It actually took us over an hour because we had some technical problems throughout. So I kept Naomi way over. So if you're trying to contact Naomi on Thursday the 16th and she was slow to get back to you, it's entirely my fault. So blame me. But thank you again, Naomi, for giving up your time. I think the biggest takeaway for me is, again, and it echoes some of the earlier episodes, like when we spoke to Nick about mortgage protection, speak to the experts early. So if you're just starting out, reach out and speak to your, whether it's Naomi in EBS or whoever you're going with, reach out and speak to them early. That way, if everything is perfect and you're ready to go, fantastic, no harm done. But if there's anything you need to straighten out with how you manage your accounts, or if there's a blip there and you need to go for another 6 months, whatever, at least then you'll know and you can make the adjustments for that and not find out later in the process and delay everything. So reach out to the experts early, tell them what you're thinking of, and they'll put you on the right path. As Naomi was talking about, EBS are hosting the Home Truths Mortgage Masterclass next Wednesday, the 22nd of March at 7 to 8 p.m. It's a free event. You can sign up online. I'll put the link in the show notes, and it's an hour long, and you get to listen to a few experts, answer some questions about the process. I'll be there too, in addition to the experts, and hopefully if any questions pop up about surveys or that part of the process, I'll be able to help out and offer some good advice there too. So that's it for now. Thank you very much for joining us again. If you have any questions, comments, feedback, or even something you'd like to see in a future episode, just email podcast@gethousesurvey.ie and I'll do my best to make that happen for you. Otherwise, thank you very much for listening and have a good day.